Hi guys, welcome to my channel. My name is Hugo, and today we're going to see how confused are you about the AT&T spinoff. We're going to see as well the best stocks for this week and do some market analysis. So now stay around. All the eToro investors who have AT&T on their portfolio and also Discovery on their portfolio have received this letter from eToro saying what's going to happen with the stocks. So this was on the last Friday, and we all received this letter and what this represents to all of us. For those who are copying, this is going to be automatically, nothing's going to happen. In terms of who own, for example, AT&T, in my case, we're going to receive as well 0.24% of Warner Brothers Discovery, which is going to be the new company. All those who have own Discovery, that stock is going to be delisted. Therefore, the shares are going to be received as, so they're going to be delisted, meaning that they're going to close the position a specific price at the time of the market close, and then those stocks going to be converted into the new company, which is going to be WBF. Those who own CFDs or using leverage, all those positions are going to be closed and none going to be received. So you're going to have your money back to your balance, and then you can reinvest in the new company, which is going to be AT&T or WBC, which is going to be Warner Brothers Discovery. Until we have the final spin-off, going to be around the end of the month. We still don't have a specific date for this, so bear in mind that next day, if you wake up and you have more stocks of Warner Brothers Discovery, it means that you received 0.24% of from the stocks that you hold on AT&T, and Discovery automatically is going to be converted into WBD. It meaning that you may lose some money depending if you want to wait for this conversion to be automatic, or if you want to sell it now, because Discovery now it could be in a high price and you could sell it now instead of waiting for the closure and the application going to close for you. That may result in a loss. Therefore, I recommend you to be aware of that. So if you want to actually to buy the new company WBD, I advise you to sell Discovery with still with profit. In terms of dividends, we already know what happened with AT&T. AT&T reduced the dividends for half. It were around 8%, and now they are around 4.5%, and that's going to be the dividend for the next upcoming quarter. And I'm going to speak about this in a few moments. What's happening now is we don't know if WBD, the new company, will pay dividends, but in the likes of the Netflix and the Discovery, I doubt it that they're going to pay dividends. So now let's look into the first ticker for this week. We're going to have two tickers. One is going to be this one, which is the FL with the ticker FL. Foot Locker. It's a company that operates in the retail and the footwear. They have a dividend yield of 5.58%. They pay quarterly January, April, July, and October. They are undervalued in 39.7%. This could be quite interesting. The ex-dividend date is going to be on the 13th of April, so bear in mind if you still have time to buy this. Remember that you need at least 2 days. It's the minimum. I usually recommend 3 days to buy the stock so you can receive the dividends. And the financial health, you will have a score of 4.6, meaning that they don't comply with the long-term liabilities and the reducing debt. In terms of assets, they have around 2.36 billion, and in terms of liabilities, around 1.74 billion. So, and the cash flow, it's quite good. It could be interesting, but the concerns that I have regarding the stock is not only we have here a market sentiment, although they went quite down in the past week, but the future growth is going to be minus 27%. Bear in mind, we may be facing a recession and in the next upcoming months or quarter at least, and this is going to be one of the industries that may be affected. So that's why I do have some reservations regarding this stock. Although the past performance we have 8.6%, which is interesting. The next ticker is going to be PBR, Petróleo Brasileiro, Petrobras. It's one of the Brazilian companies, one of the biggest companies in Brazil that explore oil and gas, and internationally as well. They have a really high dividend yield of 21.13%. They only pay triannually, April, August, and December. And in the past 2 years back, they didn't pay any dividend at all. They stopped paying dividends, but now they come back since last year. They are undervalued in 60%. The ex-dividend rates in 14th of April, so we do have time to buy this one. And the financial health is 5 of 6, meaning that they're not only complying with the long-term liabilities, and in terms of assets, we have around 168 billion, and in terms of liabilities, 138 billion. Sorry. In terms of market sentiment, we do have a buy, although the future growth we're going to have minus 2.3%. Having in consideration they are undervalued in 60%. This could be a good investment. The past performance is 49.7%, and with all this war with Ukraine, the stock may be increasing in the next upcoming. Well, actually, they already increased due to oil. I don't know if Europe's going to buy from Petrobras, but most of the negotiations are being done via Arabic countries. Therefore, I don't know if Petrobras is going to get a share of that, and if Europe is going to buy from Petrobras, from Brazil. Although the dividend yield is quite high, it's not usual. The stock went down quite a lot. In resume, I do think this is a really nice stock, but it's really high in terms of risk, because this dividend yield 21% is not normal. Although we have a future growth of minus 2%, is not quite as bad as possible. In terms of financial health score, they are quite good. They only pay triannually. It's not one of my bests, but they still are undervalued in 60%, and that seems to be interesting. I do think that being undervalued in 60% and the future growth being minus 2, I think we have here a balance, a really good balance, and with a dividend yield of 21.13%, I do think this could be interesting, unless for a small quarter, just if you want to receive the dividends, if that's going to be the risk. I do have some reservations in terms of Petrobras, and they don't have a clean slate in terms of media and adverse media. They do have a lot of adverse media in the past few years with the government, etc., of Brazil. So therefore, I'm not willing to buy this. But if it wasn't the adverse media, I do think this will be a really great stock. The other stocks for this week, we're going to have IBB with a dividend yield of 3.25%, although I've been selling IBB because they are on the top highs, and I need that money to have in cash in order to reinvest on other stocks, because I'm foreseeing a crash or a recession, and I need to have money in cash in order to battle and I'm trying to invest more on other stocks as well, that are going to pay me not only more dividends, but trying to grow my portfolio, as for example TQQQ. AT&T, as I spoke in the beginning, they have a dividend yield of 4.68%. So as I mentioned, they have before a dividend yield of 8%. They reduce as a 4.68% because of the spin-off. Who has, in my case, who are copying me, going to gain from this spin-off, because we're going to receive stocks from Discovery, and I think that's going to be quite interesting. We're going to receive really good profits from that company. Beside the fact that we are losing money with AT&T, I don't think that's going to be for a long time, because AT&T wants to invest heavily on the 5G, and I do think in the next upcoming years we're going to see some returns on AT&T. And in terms of the ex-dividend date, is going to be on the 13th of April. So the last week markets, we did saw here a big decline of 3 points on the Nasdaq, and we're going to see this on the heat map, where we see Microsoft, Google, and Metadata being down around 2 or 3 points. So we're going to see this on the heat map. We did have here a big increase on the UK market. Unfortunately, was not on the stocks that I own. Well, although they did have an increase, IGA didn't increase much, but lead gen increased a bit, and also BATS increased a bit as well. Although I'm willing to probably sell BATS, but I'm still holding to see if anything comes up in order to shift to the other stock. In terms of the last week's sectors, we have here the semiconductor sector. The Intel, for example, is one of them that got affected. AMD got affected as well. Although AVGO got affected a bit as well, around 2 points. We were going to see this on the heat map. And the only sector that has increases this week was XLV with healthcare, where ABVI was one of the stocks that increased a lot, Pfizer as well, and I managed to sell some shares of ABVI with around 100% of profitability. Although I do have more ABVI stocks, but I don't willing to sell more. I want to stick as I have at the moment. In terms of the heat map, we have here the technology sectors, where we can see that Microsoft was quite affected, and Google as well, and Facebook. That's why the decline we saw before. And we have here as well the electronics technology, with the semiconductors. AVGO went down, and Nvidia went down as well, and Apple went down as well. And the only sector that was good this week was actually the health sector with G&G. We have here ABVI with increase of 7.55%. I think was a really nice option to sell it now. And you have the consumer durables like Tesla, etc., that are impacted. Usually, when you are facing a recession, these are the first stocks that going to be affected, the consumer durables, and we're going to see a shift from here to the consumer non-durables, as the Coca-Cola and Walmart, for example, because people are going to still consume to buy food. Okay, guys, I hope you enjoyed these tips for this week. Don't forget to hit the subscribe button and like. And if you want me to talk about any stock that you think that's important for you, please let me know, and I'll try to do a video on that. Once again, guys, thank you, cheers, and have a nice week.